Hello everyone, this is Untitled Chapter from Forex Trading Unlocked, and we are here on April 19th, 2022 with a live streaming Forex market and cryptocurrency analysis for you. Before we get into this webinar, we're going to show you our disclaimer just to remind you that this is for illustrative and educational purposes only. So it's been a crazy week already and we're only just a couple days into it. Just to remind you, if you haven't done so already, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Alright, so with that, we are going to get to our live active screen. We have the Forex-Trading-Unlocked.com website pulled up, and we already have from our Market Analysis tab the workstation page pulled up. We're going to skip past the numbers. We're going to get right into the heart of what is going on. So, alright, we have the Euro US dollar. Now we know, I'm sure you guys have been watching the dollar index lately, and you know that the dollar index has been screaming higher. It's hit over that $100 mark, and we are wondering what is going to happen with this market as we continue. Now, one of the major forces that's driving everything right now when it comes to the US dollar is obviously the Federal Reserve and interest rates. We know that we're going to keep on hiking rates for the rest of the year. Well, we should end up somewhere at least at 2% or more by the end of 2022. Now, interest rates are a function of currency pricing, so you have to remember that this is actually having a big influence on what is going on in various in the various Forex currency crosses. Alright, so we're going to start with the Euro US dollar. Remember that the Euro US dollar is the #1 weight in the dollar index. Okay, so it's very important that you remember that. Oh, we already got a hello from someone on Twitch. Hey, how you doing? Glad you're checking us out today, checking it in. We're just starting this webinar. Got a lot to talk about. If you got any questions about any markets you want us to cover, just let us know by leaving a little thing in the chat. So either on YouTube or on Twitch, you can do that, and we will try and answer that as we get through this webinar. Alright, so as we get through this, now let's get forward to the Euro US dollar. Alright, we are higher on the day already, making higher move highs, trending higher from the low that we set yesterday. So as you can see, we did make a higher move low. So as far as a swing trade, this last high right here is key, and so is the last swing low from yesterday. So we're coming off a lower move low, a lower move high, and now a higher move low. So the question is, are we starting to bottom in the euro? I don't think so. There's a lot of things besides the interest rate factor that's giving a lot of stress on the euro versus many crosses, not just the dollar. Dollar strength is definitely, if there's one currency that it has an impact on, it would be the euro, because the EU is they don't produce oil and they are energy dependent, and also their interest rate policy is not doesn't seem to be on the same page or on par with what we're doing right now. They're at least not as aggressive. They're still trying to hang on to the lower rate scenario. Alright, so Euro US dollar, we don't have a buy signal. I would be very careful. Don't try and catch a falling knife here. If you're an aggressive bull, then obviously use the swing low from yesterday plus a couple pips as your risk. Anything below there while you're making new moon lows in a very bearish market. We know long-term, intermediate term, short-term, and even, well, on the hourly right now, it's in a short-term corrective up phase. Okay, so that's something you want to be very mindful of. Alright? Okay, so with the Euro US dollar, let's see what kind of target we can have here. So if we use this last swing high down to the last swing low, and we look at the 50%, we go to right here, and then we also pull up a 0.618 right there. Let's get rid of this fib thing, make it a little clearer on the chart. Alright, so this gives us a little bit of a upside corrective area. Now, am I bullish, and do I think that we're going to get up to this area? I don't know about that one. I think that's a little rough. The only way I would see us really getting a rally that could have enough momentum to trade all the way up towards this 109.71 up to 110.21 area would be if you saw it had a bounce in the 30-year Treasury bond and the 10-year Treasury note. Should we have that kind of a situation, then I would think that you would have a little bit of profit taking on from the bears from the Euro US dollar currency cross. Okay, so as far as upside potential, this is definitely the extreme that I would say that you were going to encounter if there is that big of a rally. I don't believe it's going to happen. I think this downward sloping resistance line is going to hold this trend intact. I think you're more likely to go sideways and chop around and bounce off this downward sloping resistance line than rally up into this target area. But we may challenge this last swing high, creating a neutral trade, at least in the short run. I would say that it's not a basing for a bounce. If anything, it would be a consolidation until we have more clarity on direction. And as far as if you look at the 30-year Treasury notes, and this is key, today the market settled down at 139.15 in the front month contract for the 30-year Treasury bond. This blue line here represents where the market was trading just a few minutes before I started this webinar. So the market's already making lower move lows, meaning higher rates by the market being dictated from the 30-year Treasury bond. This is also happening in the 10-year note as well. Okay, so be very mindful of that. As long as those markets continue to hit the new lows, we are definitely likely to see a lot of dollar strength, especially against something like the euro. All right, so negative is should we fall below the support line here from this last swing low, well then I would say we have something to kind of look at there. Now 107 half is usually a good 107 even to 108 half is usually a good consolidation area, an area where you find support, especially around 107 half. This is historically. I'm not saying anything technical right now that would really dictate that. It's a historical bouncing area where you seem to find a lot of support, okay? So we are treading on this area, and that might be why when we're starting to see this market have a little bit of trouble as far as gaining momentum to the downside. And that, like I said, I'm not bullish. We don't even have a buy signal either. So right now, use caution. If you're an aggressive bull, then I would use the last swing low here that was just from yesterday's trade plus a couple pips, which then puts you also right on the last major lower move low. So that gives us our little parameters right now for the Euro US dollar. Let's move on to the British pound US dollar. Now this one has some trades going on here. British pound's a little bit more bullish this morning or today than is the Euro US dollar, as you can see. I would expect more strength from the pound than out of the euro. So whereas if the euro consolidates, I could see the pound actually starting to not be bullish, but have enough energy to have a correction back up towards this 132, definitely above the 131 area, challenging this last swing high. Now, am I overly bullish or anything like that? Absolutely not. I just think that as far as this weight in the dollar index, the British pound US dollar has a really good chance of being the one to have a little bit more of a bounce. There's more upside potential there. I would key off of the last swing low from a few sessions ago, plus a couple pips. Anything below 129.73, remember this market is in a bear market, making lower move lows and lower move highs. That is a trending lower market that confirms it is bearish. So any bullish trade you try to put on, be mindful of your risk levels and have a rational expectation. Don't try and pick a bottom, especially right now with the strength in the dollar that is being driven by interest rates. Now, that doesn't mean per se that we won't have a nice correction in the interest rates, where then you would also probably see a little bit of profit taking in the US dollar crosses, not completely across the board, but in a lot of different areas. Now, US dollar CHF, the Swissy, boy, did that have a nice little rally to new highs today, and now it's made a higher move high, and it's kind of backing off a little bit. I would say that right now you're seeing a profit-taking move going on because you had such an exacerbated trade today. Monday we had a light trade, and then Tuesday, boom, we had this excessive move here. This show of strength, I think right now what you're seeing is a pause for the cause, meaning that we're going to stay bullish, and right now I wouldn't expect any large correction, especially with the interest rates continuing to go down, oil going up. That means that right now I would view any type of counter trend trade right now, like as we've been talking about, as a correction, and I would use a lot of caution as to whether or not it's going to last or not. Okay, so be mindful of that. It's very important. All right, so as far as any type of trade here. I would not expect any really strong correction. If you do, maybe get back down towards this 94.5 area, but that's about the extreme of where I think you're going to see it as far as the US dollar Swiss. Upside potential, I think it's going to grind higher. I don't think you're going to see a continued explosive moves like you've had like this day here and this day here recently. I think this was what was needed to pierce resistance. Then I think we're going to see a little bit of consolidation, but we may still pop up to 95.5 before we really start to consolidate. But parity coming anytime soon, is it going to happen? It's very likely, especially with what's going on in the market right now. But when we get to the yen, you're going to see why I think this is going to change. Okay, so speaking of the yen, this is our segue. US dollar JPY. Now this market here, boy, what a rally it had. Now I would be very mindful of the fact that it made higher move highs already today. This is a profit taking slide. I would use caution. Be careful selling into this rally. Now we do have a benchmark at 130. 130 even is the line in the sand for the Bank of Japan. A couple of weeks ago they came out and said they are going to defend their currency. They will not allow it to slide beyond 130. So whether or not it happens today or tomorrow or any time this week, as far as intervention, I can't tell you when that's going to happen, but I would say that the second this market touches 130, unlike the U.S. Fed or other central banks around the world, it would not shock me that the U.S. dollar, the Bank of Japan does a rate hike. Now, to what degree will they do a rate hike? I don't think they're going to do a quarter point. I would say they do at least a half a point, and I would not even be shocked if they did a full 3/4 to a full point by doing so. When they say they're defending their currency, they really, really mean it. Now, the Japanese yen, just with the dollar alone, look at what's happened from March up until now. You've had a 14 handle rally from the beginning of March into the third week of, or almost through the third week of April. This is a tremendous move, especially because we've only had one rate hike so far in the U.S. Now we know a lot of this is being driven by the interest rate factor, and also a lot of it's being driven by the oil factor. So just be mindful of that. It's very important that you're aware of these variables. Oil and interest rates are definitely driving this trade with the US dollar yen. But we are coming to this area where I would use caution. Now, does it mean that the Bank of Japan is going to really come out, like I say, and pull a kamikaze move? I think that's probably what they will do. I don't care what time of day it is or what day of the week. I think if it does hit 130, within 24 hours you will see an action. If not, within less than that. Now, is it going to happen that second? I don't think that's going to happen, but I would not think that they're going to have some meeting of the minds. They already know what they're going to do. It's just a matter of how fast they will pull the trigger. Okay, and they will. And like I said, I don't think you're only going to. I would be shocked if they only did a quarter of a point. I really think they'll do a half a point, even upwards of 3/4 or a full percent, because the Japanese and the Swiss, they don't goof around. Like, they don't play this slow game. Like, when they take the pain and to get themselves back on track right away. Okay, so that's something you want to be very mindful of. Okay, so US dollar yen, we are looking for a challenge of 130. Beyond that, because of these restrictions, I would start to be very mindful of your stops if you're long. I'm definitely taking profit at 130, and also I'm very cautious with where my stop levels are now. I've already been long in this market since the summer, and working the little dips here and there and adding to it, and there's no, remember, I always tell you and remind you, pigs get fat and hogs get slaughtered. So now is the time that if you have been riding this trend, don't be ashamed of getting out a little bit early, because there's not much room for this, and maybe it will. Maybe it'll explode through 130 and go up to 140, 150. But I don't look at the Japanese like I do most other cultures, let alone countries around the world when it comes to business. The Japanese do what they say and say what they do. So that's what I would pay attention to the most, okay? So, but that's my opinion, and also my experience gives me that rationale for how I'm trading this and why I'm presenting this to you. Okay, so be very mindful. Today it had a really, really nice rally. The fact that it's coming off a higher move high that it made already this evening and what have you, that's just profit taking. Don't get bearish and try and get in front of this freight train, because if you sell into this rally, as you can see, just in the last 2 weeks alone, let's see, there's only been one down day since the 1st of April. We're now on April 20th. So every single trading day this month has been positive, and the one that wasn't was a little doji. It was basically the same opening and close. So this tells me that the strength is here. Be very mindful of it. Don't try and get in front of this freight train. Now, if you get a valid sell signal, I'm not saying don't act on a sell signal. Just use caution, and especially with your risk, don't leave a lot of room. I would be very cautious, because I would expect volatility to definitely increase in this market over the next not just few weeks or few days, but just even over the next few hours. Okay, so very strong momentum here. Just to give you an idea of how strong or how weak the yen is, British pound JPY. This market also looks a lot like the US dollar yen trade, doesn't it? Then you also look at the Australian dollar JPY. Now the pound has been weak versus the dollar also, but not as weak as the yen. Australian dollar, that bottomed out and started to get a little rally going. Look at this. This is making new highs versus the yen also. But it's getting very toppy. You can see that how the Australian dollar is not as strong and has just pierced resistance in a little bit of a way versus the way the dollar had, and also with the pound. So you can see how strong this trend is, meaning the yen is a bear. So it's not just the US dollar that's hammering it, it's these other currency crosses as well. Okay, so now when that happens, that leaves credence to the fact that there's going to be, when the Bank of Japan does hit that 130 target in the US dollar, that's when all these other ones also should see a retracement happen as well. So be mindful of the fact that if we see an action by the Bank of Japan and the US dollar yen starts to sell off, well, you should expect that to happen in the pound yen, the Aussie yen, and a bunch of other currency crosses versus the yen, because the yen has been so weak. Now, something interesting here is we have a potential buy signal forming here. This is a potential 3 inside up buy pattern. Now this today, you can see how strong it is already today. Now this could fall apart very quickly. Overall, the trend is up. We're not trying to pick a bottom, but it does look like this corrective move may have solidified. If you look at the 50% mark from this thing, it didn't even make it to that. So if this is just a corrective move, we wouldn't expect it to go much more than the 50%, or to definitely the 0.618, which would put it down around here. And then we look at this, interestingly enough, pretty much the line supporting this trend is a 45-degree angle, and it also comes right in here. So I think that this is a good chance that by tomorrow, when we start to head into Thursday's after tomorrow, not tomorrow, which is now actually today in some parts of the world. That's why we're doing Thursday's numbers. On Friday, when that trade begins, if this looks kind of like this and the market opens here or even higher, then I would say that the Australian dollar, US dollar has a very good buy signal, and I would use caution fading it, because we could just have maybe this market topped right here, but I don't think it did. I've been calling the Australian dollar, US dollar bottomed out here a while ago, and I don't think that we're in a corrective phase. I think that if anything, because of the commodity pricing, and they're also going to be raising their rates, that gives a lot of strength to the Australian dollar versus the US dollar, unlike how the US dollar is overwhelming the yen right now. So potential buy signal forming here in the Aussie US dollar. New Zealand dollar, US dollar, this one here has the same type of thing forming here. Is it going to happen? I don't know. Now this market's a little bit more extreme than the Aussie. I would use caution with this. Do I think it's bottomed overall? Yeah, I don't know about that one. In tandem, it has been trending higher, but as you can see, this one doesn't have the same type of trend. This one had a similar 45, but it fell through it. So it's below that 45 marker. This is because of COVID. There's a lot of COVID restrictions still in place in New Zealand, and they're fighting it. The government does not want to come out of it. So with that being said, there's a little bit of divergence. So pay attention to the Australian dollar, not the New Zealand dollar. I know they tend to trade in tandem to some degree, but right now this is going to be the laggard, if you will, in the New Zealand dollar, US dollar. Now, US dollar, Canada, it's amazing. All these other currencies are swinging away, and this thing's been a nightmare chop fest for the past 2 weeks. It started this rally, and then all of a sudden fizzled out, and it's going nowhere. As you can see, it's been a choppy grind. The question is this thing going to become an overall bear, or is it going to actually find some strength and rally? If it does, I still see it as a big sideways. This one, unless you have a buy signal or a sell signal, I would stay away, because right now there is nothing right here indicating which direction it wants to go. I am bearish. However, I don't think that it's going to happen. I think that it's going to be more likely that it's going to be a chop fest than anything else. Okay, so until we have a signal and something to say, because of the politics that are involved, and the whole thing has literally shocked me for over a year now with our politics between the U.S. government and Canada, especially since you're basically looking at two communists, or communist supporters, if you will, and they're not getting along. So, but whatever, that's the biggest shock. We'll see what happens, and if this does continue, especially because oil right now, if it continues to rally, it neutralizes a lot of the interest rate factor, so that's where it gets tough. Canada is very commodity driven, but in this situation we're looking at a big neutral trade. Now, should we have an excessive sell-off in the interest rates, meaning going higher, then I could see where you see the US dollar Canada get a little bit more bearish a little more quickly and then pound new lows. And I think that rallies to sell versus breaks to buy is more of the kind of view that you should have when it comes to the US dollar Canada. All right, now let's go look at the Btc Usd. All right, Bitcoin getting a little choppy the last week and a half. It looks like it took a holiday as well. You can see it made a lower move low. Did it bottom? I don't know. If you look at it as kind of, I guess, grinding higher, it made this higher move high up here and then made this higher move low on a longer term scheme, if you will. And if we go like this, let's see, where's the support? Oh, yeah. It's kind of holding the trend bearish wise. Let's see. So let's see if we have a strong rally over the next couple of sessions. I guess 44,000 would be a nice little upside target. I would use caution here. This is where we had the swing low and it was kind of toppy. I think this will be the, if it's going to wedge, it's going to start to narrow from 44,000 and chop around here between 44 and 40,000. Get tighter and tighter and tighter, and over time, as we get into probably mid-May, then break out either to the upside or the downside. This market overall is not very, very bullish. However, if we look at the ETH USD, a little bit different. This one, definitely from March on, does look a little bit more like it's in rally mode. It looks like it had a nice little correction here. Is it going to be bullish? I don't know about that one, but I think you have a better chance to find strength in the Ethereum market than you do in the Bitcoin market. But overall, right now, I think you're going to see a lot of sideways in the cryptocurrencies, especially with when you look at what's going on with the Ukrainian and Russian thing. The Russians and the Ukrainians, believe it or not, all of them are very active in cryptocurrencies, or at least were. But of course, if you have no internet connection and you're in the middle of a war, it's going to make things a little bit more difficult. So that also is the argument for why regular currencies still have their viability. All right, let's go back to the Euro US dollar before we end this webinar. Do we have any questions? No, we just had a hello. Got a couple likes on YouTube and Twitch. Thank you very much. A couple shares. Yeah. No. Oh, wait. Here we go. A-list party music. Thanks for the analysis, Japanese candlestick. Oh, hey. Thank you very much. Appreciate it. A nice comment from one of our YouTube followers and watchers. It says, thanks for the analysis. And Japanese candlestick book is fantastic. So he's read. So this viewer has read the book, High Probable Japanese Candlestick Patterns, and we love the plug. Thank you very much. We appreciate it. In fact, just for that, type that in the chat. All right, get that. Let's see, did I spell it right? I just got back from vacation. Sorry, guys. You're probably wondering, where's he been for the past week? Well, spring break for everyone else, and I had spring break too. So I went down to visit my mom for the holidays and just got back traveling. So last week was out of town, and now I am back in town. And I will also be doing a webinar for eoption.com at 1 p.m. Central Standard Time tomorrow, just in case any of you guys are around. It's on options in the stock market, on straddles. So I also do things with them to help them with their equity markets and option markets, and help them with some webinars and stuff like that. Especially like the comment on YouTube, that's applicable because I show in the book how you can use options with Japanese candlestick patterns. Is a great way to find signals and strike prices and things like that, and targets for strike prices. All right, so back to the Euro US dollar. It's coming off the highs, a little bit quiet right now. I would think that over the next couple hours it will be, as we wait for the European session to open up. Obviously, the Japanese session is in full swing, and right now we're seeing profit taking. Remember, that one I would use caution. I would look for a break to buy rather than a rally to sell until you get above 130 in the US dollar yen. So anyhow, with that, since we don't have any more questions or anything on YouTube or Twitch, we're going to, let's see, pull up this and get back to this. All right, so if you have not done so, once again, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, and also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com. You can see it on our YouTube if you check out this video. Someone left a comment saying they like the book, and we appreciate all the comments, questions, and criticisms all the time, no matter what. It's all a good thing with us. We love the interaction, and we're glad that there are people out there that appreciate it and are gaining some knowledge in the trading industry, and hopefully it helps to cut your losses and help you get nice winners and maintain an upward spiking equity curve in your trading accounts. All right, thank you very much for everything today, for hanging out with us. I'm Teddy Keckstedt from Forex Trading Unlocked, and check us out at www.forex-trading-unlocked.com. You guys have a good night or a good morning, depending on